Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Friday, November 22nd, 2019. Just want to go over a few things I'm watching, kind of a follow-up to the charts I'm watching, plus a couple other things, and yeah, won't go very long. And I also want to touch on the broad markets. Usually I start with the broad markets. I think they're starting to wake up, and I think they'll continue to wake up more, meaning we're seeing that volatility expansion, the price expansion so far, from these little half point, 0.5% daily gyrations to a little bit larger. And of course, what are we on now? The third consecutive day down. Let's just start with NG. Let's spend a little more time focused on where the opportunities are to make money, maybe a little less, doing the same old. If there's really not a lot of changes in the market to update, there's really no reason to spend 20 minutes talking about them every day. But they will perk up, and at that point, you're going to see more frequent updates because the levels then change and the developments change more often. Something that constantly is changing the technical posture is natural gas. This thing has just been an ATM lately, printing money, just spitting money out with, divergent low, just beautiful technicals. You have this falling wedge breakout. We're long back here, short on these. We're official, unofficial, throw it out to trade it so often, and it's fast. This is active trading stuff. These are in and out, just a few day trades sometimes, get 5, 6, 10%, maybe 15, 20, get out, and then look for the next trade. So even within these intermediate trends, there's these short-term trends that here's a long entry here with a long trend that started, second breakout there, plenty of objective long entries, but also these short entries here for these pullback trades. And then here, let's just go over this. So this one most recently was posted back, all these are time stamped and date stamped on the 18th, whenever that was. That was Monday, yeah, this week. So here's just in 1 week, setting up, could be setting up for the next long side trade. We had unconfirmed divergences, kind of had it reversing anywhere from about here to confirm those divergences. The next update on the 19th, yep. The notes on that one might have been posted in the trading room. You could take it here anywhere from this 250.08 level support down to that 2479. You have a very nice support zone there, and if you reverse, you'd get we actually had the confirmed divergence, and boom, reverse right off that 2508 level. Nice, impulsive leg up. That's what you want to see. Divergences are confirmed. Hit that level. We were consolidating on that first target. You need to break that. That opens the door for the next move up, and boom, it's broken. And it's it's how it works. It's like dominoes. You hit one, level, the next one goes down, or it gets taken out. That opens the door to the next leg up. Now, I want to talk about this too. So in the last update, I posted 2 updates on the front page today after the homepage post, the charts I'm watching, 2 different updates on NG. I posted this chart in the comments section below that it had hit that 2697, but you see this big up, and that's what you get. You broke out. As I said earlier this morning, if you break 265, that 2658 target, that opens the door for the next one. You had a very impulsive leg up. Here's a potential downtrend line, or uptrend line we'll watch if we get a pullback down the road. But right now, that's bullish price action, very impulsive. Now, what it is also, see that near vertical, lift there, said that could be a momentum fueled overshoot of the 2697 level. And then I did post this chart right afterwards, or just did that. That's exactly what it was. And this is, just a takeaway is that, when I talk about a level being taken out, yes, opening the door for the next one, it's all the better when you have consolidation or you're not very overbought or extended. A lot like the stock market, breaking out to new highs, but I wouldn't even call that a momentum fueled overshoot. We don't have a lot of strong momentum, but either way, I wanted to point that out. So there it is. You see, you have that brief momentum fueled overshoot where stock tends to carry above level, and it's just a term I made up. I'm not probably going to find it anywhere, but I've been talking about that for years. Momo fueled overshoots, I call them. And then you come back down there. But I do think it's constructed. Now, whether we pull back more or not, The more bullish, the less consolidation we do, just the more bullish it is for natural gas. But I just wanted to say, I don't see anything in this chart right now that indicates the end of the run is over. It can always be over at any resistance level you hit, but with these big divergences, and again, these are the reasons I do these videos. I want to convey my thoughts. That certainly would indicate a larger rally, more upside to come, whether or not we pull back here. And if we do pull back, what you want to look for is each of the resistance levels, former targets, once taken out, then becomes support. So ideally would be really to hold above 265 because we consolidated there quite a bit and then broke out with this big impulsive leg up. So that is ideally, that tells me that was a pretty significant level where buyers and sellers battled it out. And so that should be, and it's not a hard line anymore at 2625, but it's pretty close. If that doesn't hold, extend this trend line and you'd still be profitable. Let's go to the updated chart here and let me just do that for you. There it is. So this would be, if you're wondering, if you're trying to, let this winter run and turn into something more. In other words, this next target up here, and possibly beyond. Quite possible. Hard to say right now. I'm just favoring this big gap. At the bottom of the gap. That's pretty significant resistance, and I think you'll get a good reaction. I may, if I'm not stopped out before then, I'm still in it, I may take profits there, depending on how things look. I mean, that means how overbought we are, any divergences on the shorter term time frames, or sometimes it's just gut feel. And then again, if we pull back and you wanted to know, okay, hey, I got this one down here on or around or not too long after 2556. I always say stops are different for everybody. Your own risk reward preference, your RR ratio. Do you use 2 to 1, 3 to 1, 4 to 1 or better? What your entry price is, what your loss allowance is. Your entry price and your price targets are the two primary determinants. If you go in at 255. And you're targeting way up here, you can allow a little wider stop. If you're just looking for a quick trade like that crude short I got to in a minute, that may just be a quick pullback trade. And then you need to have very much tighter stops. If you're only trying to make 1, 2, 3% pullback on crude, then you shouldn't use a 3, 4, 5% stop. You should use a smaller stop. All right, that's that. I just wanted to mention. So it's fine if we consolidate, and all the better if we just consolidate there briefly and move on up, but it's also fine if we pull back a little. It's a pretty nice lift, and again, nothing goes straight up or down. That's just, you got to remember. But natural gas can sometimes just power through resistance like it's not there. All right, enough talking about that. Oh, and then of course UGAS. I know a lot of you guys trade UGAS. I did post in the update in the comment section, both updates, I posted this chart. I said the same thing. Where was it? We had UGAS hitting. Well, I'll show you. Let me find it here. UGAZ 60. Okay, that would be right here today, earlier. There it is. Mentioned it, hitting that level and making a slight momentum fueled overshoot right there. And same story, I put on the notes on there. It could pull back if that's a Momo fueled overshoot, which it was. And here's UGAS right now. See, this is how it works. Boom, popped that level, went into the gap, had a tremendous amount of upside momentum going in there. Look where it's trading now. I had that target at 1492. We're now at right about that level. But so far, a little reaction there. That's what I call reaction. We overshot it, snapped back down below it a little bit or to it. Yes, slight below. And, the buyers and sellers are battling it out now. If the buyers can push it up, pretty much at this point, a break above today's high should open the door to the next move up. All right, enough on that one. Speaking of things like that, before we get to crude, I want to jump over to one stock. I've had it as a trade setup and it triggered today, but I'm watching it. Somebody asked me in the trading room, "Hey, Randy, is it a go on PBYI?" And my answer was this. Let me show you what happened there. I had a price alert or a buy trigger on a break above $9 because remember we had that $8.99 resistance. It was a reaction high here. Right about there we had 888 was a high, so I figured any pop above $9 or so would enter this gap right here where my cursor is. There's a big old gap right there. There's price resistance. And but this morning, in the trading room, after it popped that, my reply was this. I said, hold off. They asked if it would run from here, and I said, only if it takes out today's high. Why? Because what happened is this is a small biotech stock. You have this condition sometimes. It can happen on Apple or Microsoft, the biggest stocks in the world. It's called order imbalances at the open, but it's more common on the lightly thinner traded stocks to have order imbalances. That means at the 9:30 opening bell, you got people putting buy or sell orders, and if you have more buy orders than sell orders, what happens, that stock opens up and there aren't enough sellers, so you get these big surges up. So you want to, this is kind of a takeaway, and these are all the things. There's an infinite number of variables in trading. I can't possibly list all these conditions ahead of time. That's why I say look for impulsive breakouts, look for above average volume, and I'll add this condition, be careful in the morning. Sometimes they break out and run. You just want to kind of look at it. And so my answer was, by the time that question was asked, we had fallen right back down. You can see this is a 1 minute chart, by the way, if I didn't make that clear. This was yesterday's close. Here's PBYI gapped up, and then boom, one big candle, and just that was a order imbalances right after the open. Maybe a big buyer. What I think probably happened, I'll bet you there were a lot of buy stops at 9. I think people, if you're a trader using technical analysis, you probably saw what I saw. I have the luxury of being in front of the computer, so I'll watch breakouts and then decide to take them. By the time that thing broke out, I got the alert we'd already come back down, and so there it is. So the order imbalances were immediately, it just abated, and then the stock went back down to where it was. Now, if you took it, it could still very well play out, but it's so far that's not what I would consider a breakout. Yes, did we pop above $9? Yes, but number one, it was due to that order imbalance at the open. We fell right back down. So far, I don't see anything special on volume today, above average volume, and more importantly, we're not above that $9 level right now. We're back down right on it. So I still think this is a constructive chart. You guys know I have my concerns about the broad market now. We're getting additional evidence in the last few days, as I posted this morning, with XLK breaking down, XLF financials breaking down, QQQ and SPY already having broken those same trend lines a few days earlier. So you want to ask my opinion or if this one is going to play out or not? Probably not. If the market drops. Now, it is a kind of fly under the radar little biotech stock. It could certainly play out, but what we've seen lately is a dash for trash. People are looking for beta, high potential return, low. They don't care about fundamentals right now. That's kind of been thrown out the window. They're buying just anything with a ticker, and you've seen the pot stocks rallying and things like that. Stocks with questionable fundamentals. With that being said, if you took it, I would stick with the trading plan, stop below that, or you could certainly use a tighter stop now that we had a failed breakout, and then factor this in. If the stock market holds up and continues to power up, and we continue to have people, a lot of bullishness in the market, people playing these speculative trades, what was that other one? Here, Clovis. Clovis from the breakout here, was highlighted back there somewhere, 102% in what, 2 weeks. That's not even 2 weeks. So this is, and that's a biotech stock. Was there news there? Maybe not, but it was certainly a technical breakout, and that continues to run. So, like I say, as long as the music's playing, then this one, could certainly follow suit. PBYI, you see my targets are, comparable. We have about a 38% gain to the first target and about a 18% to the second target. But I just wanted to say this. If you haven't taken it yet, I wouldn't take it right now. And my answer to just get off this one and move on to the next one, to that member in the trading room, I said I would take it on a break above today's highs. Because if it powers back up, then that means the buyers are coming in, and you want to be safe. You wait for a break now of 928. That'll take out today's highs. And then I think, just like natural gas, the way it kind of really exploded today when it took out that level, I think this one would then, the buyers would start to come in. So look for things like that, volume, increasing volume as well, and pay attention, pay attention to the other biotech stocks, the biotech sector, the broad market, because if it starts to roll over, these momentum players, they'll scurry like cockroaches when you turn on the lights. I'm one of them. If I'm playing these momentum stocks, unfortunately I took out ACB too early the other day, and I knew it too. I had a tight stop. I'm fine with that. and I took out Clovis a little early, but caught, milked most of that so far, so I'm fine with that one, and I'm not chasing it now. PBYI, I do plan if the market holds up and we take out today's highs, I'll enter that one, and it is an official trade if it triggered the stop. I'm going from memory. I think the stop was $9, and let's move on to the next idea here. Okay, I shared my thoughts last night and again this morning that I figured today would be the day of pullback, and I didn't think it'd be 1-2%. That's not what you get in a stock that's or an ETF that's gone up 20% in a couple days. ACB, which I took right here off the lows the other day, got stopped out a little early, but down 12%. So hopefully, if nothing else, those that, if you got in a little late on this rally, you use stops, because I've traded these things long enough. Volatility in above size gains, it cuts both ways. The only constant that I know of in trading and investing is that risk and return go hand in hand. There's not a stock out there ever that's going to give you 20, move double digits in a day and do it quite often, that doesn't have on their bad days double digit, 10% plus drops. That's par for the course with a stock like this. So when you're playing this momentum, it's great when you're on the right side of the trade. And that's why, like I said the other day, I just I started that video, I had a stop I just set, and it got hit right there. I put a relatively tight stop because I was trying, if it wanted to keep going, which it did, it just pulled back a little and got me. But had it kept going up, I would have just kept raising the stop, and then ideally, I would have had the stop a little bit above, that high yesterday, and then get stopped out. Or like I said, I had pretty high suspicions today we're going to get a pullback, so I probably would have, even if not stopped out, just closed it. Why? Why might I have done that? Well, gap downs, that's one reason. Let's see what ACB did. No, actually, see, this one worked out okay. If you had a tight stop yesterday, you didn't get burned too bad, because we gapped down slightly. This is a 1 minute chart. So you can see we closed the day at 312 and we opened the day at 308. You were lucky if you were trailing a relatively tight stop in ACB. There are many stocks that I see like this, and what happens is they'll gap down 12% when they decide to turn the corner. And you might say, oh, well, that's okay, Randy. I had a stop at 309. Wrong. Two types of stops. Stop loss orders, which I prefer, and the way they work is when your stop price is triggered. Let's say at the close yesterday you went home with a good to cancel stop loss order at 309, and let's say this thing gapped down here to open at 287. Guess where you get filled? Not 309, you get filled at 287. Stop loss orders, once your stop price is triggered, in that case 309, are converted into market orders, and they go in as a market order, and whatever that stock opens at, you're going to be filled, whatever the prices are at that time. Now you might say, okay, well, all right, I will use a stop limit order. Stop limit order says if the stock crosses down, to 309, sell me at 309, but nothing 309 or better. Do not fill me at 308. 307, you can only fill me at 309 or 310, 312 if it's a better price. However, here's the problem with stop limit orders, is if they're bypassed, they're never triggered. So that order, and just in that example I'm making, you had a stop limit order at 309, and you open down here at 287, and the stock never looked back. Well, guess what? You're still long that position. So there is absolutely no way to, guarantee. Options are very expensive on these stocks. How do you then manage that? If I'm scaring you out of this, you don't take a big position. For ACB, I didn't have enough in there that would have hurt me if we dropped, another, if we had opened the next day when I went home with it, if we went down 10-20%, I wouldn't have been, wouldn't have had a significant impact on my portfolio. So, when you're targeting stocks that can do, how many percent is this in just a couple days? This one is, let me move that line now, 215. That thing rallied in 3 days. It rallied 51%. So you trade a stock like that, and that's what you're going to get, are those big moves. Okay, enough on that. And as far as you probably know where to buy it, okay, that looks like an objective level right there. I'm going to hold on. I'm going to run out for a little bit. I'm going to run out today for a quick errand. Looking at it, I'll have to, I wasn't planning on digging into the charts, but I like that. Yeah, I like this area right there. for maybe a bounce trade on ACB. I'll have to look at the other ones. And okay, so let's say I might do this before I leave, is buy it here and put a if you know, here's a tip or suggestion for you guys. I like to use OCO orders, especially when I'm not in front of the computer. An OCO order is here. Let me stop this video and buy a little of this and do that. Okay, so I just bought ACB at 272, and what I'm going to do is before when this video is over, I'm going to turn around and put a stop loss order somewhere right around here, and I'm going to hold out for a target up here about 348 or so. That's where we had that stop on the previous trade there, and that's also the 350ish area is where I see this stock going. I can't rule out another leg down, that this was just a dead cat bounce, and again, so I'll give it a little room, and I'll make sure my risk reward is favorable, with about the total upside, just to kind of eyeball it here. If I'm targeting just under that 350 level, that's almost a 30% return. So I could allow for a 10%, 10% stop loss, no problem. I'm not even going to give it that much. I'm going to give it a better RR, about maybe 4, 5, 6%. Right, probably right under here, somewhere in there. And again, I'm gonna align that. I'm gonna look at the charts, which I did when I started the video, and I paused the video, I should say. We have MJ at support as well, so I didn't take ACB, just a gut shot. I have a pretty decent support right there, not solid, but it's support, and traders are watching technicals on these right now, and so therefore I'll I think that helps align. And if it goes much lower, there's a gap right there. They might want to take that down and backfill the gap right there. That's where we gapped up. And so, my stop on ACB will align with a stop somewhere just below all these candles right here around this level. And again, that's not too far from where it was when I just bought ACB. It's only about 3%, so it's a pretty favorable risk reward. Maybe I get stopped out, but I like the odds, and that's what it's all about. Keep your losses small and allow your winners to run. So anyways, that's my thoughts on the pot stocks. There's a correction. So let me say it another way. I think we hit the minimum pullback I was looking for. This is it. It could certainly morph into more, but that's the pullback that I suspected would probably come today. And I still like this bullish divergence of selling climax, so there could be a lot more. I just want to be very clear on that MJ could very well run up here about 32% from where we are to that 2316 target in the downtrend line. And if it does that, stocks like ACB, Tilray, all those are going to go up more, because ETFs tend to be, your returns aren't as high. There's probably, if ACB gets up to that comparable level, 554, you're talking about 100% return. You're talking about a double on the stock. So, and in that case, maybe if it gets near 350, instead of taking profits at 347 or 344, maybe at that point I'll just put a stop at like or what I'd say 347, or 344. Maybe I'll put a stop at 338, 335. Allow for a little give back and profits if we get a reaction there, but then hold out for a bigger move. It all depends on what I see. It's too early for me to tell you if it's even going to get there, and if it does, I'll have to see what the charts look like at the time. Okay, let's look at the stock market real quick. Everyone, always wants to know what the stock market's going to do. And again, you can sit here and say you've been buying the dips lately, and you're making, and maybe you are, and it's making, and more power to you if you're doing that. But for the last, here it is. This is I'm going to measure out with the measuring tool. I'm just grabbing that random candle back there from when we gapped up. That's 18 and a half days. So after today will be 19 days through today. And this is the S&P 500, and it's up 1%. So 14 trading sessions, 1%. That's why I like to trade stocks like ACB, and why I like to trade natural gas and things like that, where you can make 6, 10, 20% in a day, or 50% in a week on those things. You're not going to do that in the S&P 500. And yes, it cuts both ways. So manage your risk to the downside. All right, where am I going with this? Breakdown, back test, bearish PPO crossover. So we have check mark there on SPY. QQQ, same thing, breakdown, back test, bearish PPO crossover. That's what I was looking for. Another red candle today. That's 3 red candles so far. The day is not over, let me say that. Nor do we have impulsive selling yet. I think the party will really get started probably when we take out the low, a recent low of about 262 on QQQ, or that 199.80 level I was looking for. So here's, I got to give it, the market's holding up despite bearish technicals. It refuses to go down, but that doesn't mean all of a sudden it can't. When the momentum traders, figure out, okay, this rally's over, and they start to exit. When you have a low volume market, it doesn't take a lot of selling pressure. And remember, the shorts have been blown out. When you have very low short interest in the market, as you do now, you don't have those shorts to cover. When there's high short interest, shorts cover. They book profits along the way. And I've seen this many times over. I'm not saying it's going to happen now, but I'm saying it could happen now. The big sharp moves come when there's just lopsided bullishness. Everyone thinks the market can only go up, and the shorts have given up again for many reasons. Not only are they not there to cover their positions, which is buying pressure, you buy to cover a short position, but then they jump in. They smell blood and they get back in the water like a shark would. So they add to the selling pressure by selling short. When you enter a short position, you sell a stock. You sell a stock you don't own, but you're selling it. You're borrowing it from somebody else. Your broker is giving you somebody's shares of QQQ or Apple and allowing you to short them. That's what it is. So technicals are telling me a correction's coming. I'm not going to tell you to hang in there. I'm not going to tell you what to do, but I'm starting to layer in already because we're having increasing sell signals. We just don't have, and maybe I'll add an official short soon, but one of the things on that, it's not a typical swing trade. If right now I'm only targeting, on the indexes, I don't add official swing trades normally if I'm only targeting a 2 to 3% pullback. That's kind of unofficial. Take it if you want, but it may turn into more, as I've said many times. And if you think there is a potential for more, because I can tell you this, you're going to feel a lot more bearish than you do right now and a lot less bullish if and when we start to approach my target zone. Just mark my words on that. You're going to see 1% plus down days, as I said we would soon see if we reverse, and that just trust me, it'll make everyone second guess the rally, and everyone will start talking about all that. And so usually that's when you get bearish, that's when you want to step in and buy. But where I was going with that is there could be more, and so what you do, you can either cover and try to, what I often don't try to do is nail the bottom or reverse to a long, or you can say, you know what, I'm going to set a stop here on my QQQ short when it starts to get near that 195 to 190, 195-ish target zone, and I'm going to allow for the possibility that we just keep on going down through there. And instead of shooting for 3% or 4, 5, wherever you entered, I'm going to hold out for a much larger gain. Up to you. Okay, and to wrap this thing up and keep it under 30 minutes, here's NQ. This morning is what on the charts I'm watching. I, updated this, and I'm going to update these lines whenever I see things. Added this symmetrical triangle pattern here, right there. You had a downtrend line, an uptrend line. It's not the most well-defined, but it so far we broke it, and that 82.66. That level's not as important as it was recently because we whipped through there. We had these whip throughs, but that's when SPY kept hitting, or ES, I'm sorry, kept hitting those intersecting uptrend lines. So NQ was trying to break down and would have broken down, in my opinion, had SPY not bounced off support each and every time these candles hit. SPY was bouncing off those trend lines that I showed you, and I'll get to in a second. Now we've broken this down, that triangle. That should open the door for a move down to 8,200. And then whether we have a reaction, I still favor one, but here's the thing, you might not get it. So the corrections due. So I'll darn it, if I've got to leave the office in a minute, I might not be there when it hits there. So what I'll just do is put a stop in place, and a higher stop. Good to. No, I'm not even going to. I'll just have a stop. I don't think we're going to hit this target today. Maybe I'll do an OCO. I'm sorry, I'm kind of thinking this through. OCO orders, again, I kind of mentioned that with ACB. It's 2 orders. One cancels the other. You have a stop order, and I like to use good to cancel, stop loss order, where I want to be stopped out if NQ in this case goes up, and a buy to cover order for a profit at a profit target. So in other words, made a mess there with drawing. So a good to cancel order. Let's say you shorted this breakdown right here today, and you say, okay, well, that breakdown should hold, and you also had a downtrend line, the triangle. So this would be an objective stop there. You have some resistance right here, price resistance. I'm drawing that line plus the downtrend line. So right about here, that's a good stop, I think. No more than that. You could certainly have a tighter stop in case it snaps back above there. Nothing wrong with that. But let's just say that's your stop right here. So you have good to cancel stop at about 80, I don't know, 83.50, whatever that number is. No, 83.50 is up here. So I don't know, 83.10. I don't have to level up. And that's your stop loss order. And then you have a buy to cover order, let's say down here at 80.50 on that price target there. And what will happen is if NQ does this first, the stop is hit and it cancels this order for you automatically. If NQ goes down here, hits that one first, it covers your position and it cancels that order. I've written about this in the past. If you're not familiar with those OCO orders, let me know, and I'll give you I'll send you a link, or post a link under this post to that explanation of OCO orders. Or you can use the search function on the site, type in OCO and or OCO orders, and you should get probably a link to that post, or several. I've mentioned them several times in the past. And finally, we're close but not there yet, and that's where I would add some increased short exposure. If we get this is those levels right here. There's those trend lines, those highlighting recently on ES, the S&P 500 futures. So we're right there, as well as that 30.97-ish price support. So really, this is what you need to see. And if you get that, a break much below here, you probably come on down here, and then once we take out this, that's your next support level. That opens the door for a move down here, so forth and so on, down to, I have on blue right here, my preferred targets right now. And again, if and when we get there, I will firm it up. Now, if we don't break these trend lines, we're going to have more of the same. The market's been resilient. Buyers could step in here, and we could go up and make another new high. So, don't. The thing is, this should be, if you are going to short the index, is one of many trades, not your entire portfolio. It's either going to work out or not. And yes, the markets, you might think are due a pullback, and they certainly are. But I've seen markets like this where when sentiment is all lopsided, it stays that way for a long time, and the market will shrug off any news as, shrug off bad news, treat good news as good news, and it could go up. So no, we'll just see. But like I said, this tells me it increases the odds if we break that level, those trend lines there, and then break 30.76, that we'll come on down here. And to see that, you want to start to see the selling get a little more impulsive too. Right now, like I said, we get these down moves, and these are just very low, low volatility, low price ranges. I want to see some impulsive selling. And that's it. So far today, so good. I posted in the charts I'm watching this morning. XLK, we had that what I called questionable breakdown. I don't know why this trend line seems like it moved. It should be right here, hitting that candle. And so Wednesday's candle was questionable because although we broke down intraday, we closed right about on there. Not close enough to say that's with conviction. Oh yeah, that's a breakdown. But then yesterday, yes, we closed clearly below the uptrend line on XLK. Again, I'm talking about the one off the October 3rd lows. And today's another red candle. Now, so if the bulls pull what they've been pulling lately and they ramp this market and close it green today, well, it's going to, decrease the odds that we're going to go much lower. But if they build on this, especially you see a pretty big red candle today close, I think then you'll start to see next week that accelerated selling I'm looking at. So there's a start there, but we haven't broken them all. XLF Financials broke down too, but now look at this. They're bidding it up today. Breakdown, 2 red candles, but now it's coming for a back test. It is below trend, so I'm going to put that on a sell signal. But again, as I told you the other day, not one that I would short because I haven't seen enough. You still have, of the 4 largest sectors, XLC is still above trend, and XLV Healthcare is still above trend as well. So only 2 of the 4 have broken down. That's tech, which is important, but it's not selling off impulsively. And what was the other one I just said? Financials. They broke down, but they're moving up and back testing. So I think it's all there. I think it happens soon. If it doesn't happen today based on these technical postures, next week, unless we get, these are whipsaw signals. So like I said, I think it's objective to be short here. Wouldn't go anything heavy. I'd wait for additional downside evidence to add to bring it to anything, anything like a sizable position. And again, if you're not sure and you just want to wait for the higher probability trade, that may take a while to come. So I'll let you know what I see. And let me see if there's anything else before I wrap this video up. No, that's it. I mean, there's other things I'm watching, but let's just focus on this, keep the video relatively short, and I'll follow up later today if I see anything that stands out. This has been Randy Finney with the Right Side of the Chart. Best of luck on your